Hello everyone and welcome to our last stage for today. Trading floors have changed over time, but the lessons and stories from that world still matter. This session brings together experienced market professionals to share what life was like in front of the screens, the phones, and the tickets, and how the market culture in Singapore has evolved. Let's welcome our moderator, Jason Fine, content strategist for our company, Ultimate Group, and our panelists as they take the stage.
Hello, everyone. Good afternoon. Thank you for coming. For all those who are drinking on the tables, you can at least turn around and find your seat. Either way, this is a pub-like talk, so it makes sense to have beers. And we did a similar session in London, and what the moderator said first was, this should be at the end of the day. This should be over beers. So we adapted. We're at the end of the day. Some of us have beers, and we hope you're well fed, well drank, and ready for unfiltered stories from a combined, I don't know how many years in the market. One of the things that Spencer told me is that the questions that you asked was, are we allowed to say this? So we'll just have to find out. And if anything goes wrong, I'm talking to the video guy. If I do this, you can just cut it out. I'm sure that on the floor this would have meant something slightly different. So welcome again, everyone, and perhaps we will start by taking stock of how by you presenting yourselves and tell us a bit about your career and what you're doing now. You can go first, Spencer.
Well, thank you for the introduction to the event today. The unfiltered part primarily is for me. My name's Spencer Campbell. I've lived here in Singapore for 28 years now, sort of man and boy, half my life, so you can guess my age from that, for most of you in the room that do FX. I'm here, they've dragged me out of the cobwebbed woodwork to have a discussion today about some of the old trading floor techniques and tactics that we used to use, and I brought some memorabilia along with me. I started finance back in 1986 at the ripe old age of 16. I'll hand over to George and let him tell you a bit more about himself.
Well, good evening, everyone. My name is George Ng. Unlike Spencer, I never spent much time in the trading side of the business. I was on the exchange side of it. And my contribution today would be to maybe give some flavor to how we transition from the floor onto electronic trading platforms. And then I was in the thick of it during the global financial crisis when we had all the defaults in the energy industry. And I was running the shop for NYMEX at that time, and we had a product called ClearPort that all the banks started to use to clear their products. So you could really see all that transition from very physical, personable exchanges to more electronic trading, and to what we have today. You have all this digitization of assets and all that. I think it's a good time to reflect a little bit on how we've come to this stage.
Great. So this is an impressive career span, and let's spend some time with how it started. Can you share about what was your first job in finance and how did you get it?
Yeah, let me kick that off by mentioning a company that most of you in the room would know as Tullets. I started with a company called Tullet in Tokyo back in 1985, doing work experience for my next door neighbor, who sadly passed away a number of years ago, Mr. Mickey Stiller. I washed Mickey's car at the weekend for some spare change.
Which is lower than a runner, even.
Indeed. And then during one of his barbecues, I was invited over, and this is how I present it in the general public, and for the first time publicly online, I was breakdancing at his barbecue when I got offered the job by a gentleman that a couple of guys in the audience may remember that goes by the nickname Deutschmark, Darren. We may get into that story a little later.
So there's an interest already. Okay, so from breakdancing to the floor, not a process that VP people would approve of today. How about you, George?
I didn't have such a colorful beginning. I actually, when I got out of school, I was helping companies get listed. and then I hopped over to the exchange business. The first job was in the Singapore Commodity Exchange, because lo and behold, they needed someone to build markets. And that was in the late 90s, when electronic trading was still in its infancy, and there was a lot of skepticism on whether that could take over the floor. There was actually a huge discussion on that one. In 1998, I remember the directors of CME had a meeting with us in the exchange and said, this will never take over the floor. And this, to have the world's biggest exchange tell you that, it was quite a in-your-face moment for us. But we were proven right. We transitioned a lot of markets onto electronic trading, built huge marketplaces with our partners in the brokerage business, and with our ISVs. Those are the front-end providers, and that was quite an experience. It's a lifetime of change for me.
Brilliant stuff. And we're heading towards the 90s-ish. Perhaps you can walk us through a day at the exchange. We have here a trader's perspective, a builder's perspective. Spencer, I see you brought some memorabilia to make life live on stage. So walk us through a day at the pit, how it looks
Sure.
like, the sounds.
Well, can I get a hands up in the audience? How many of you in the room, because I spot a few faces, either worked on the Life Exchange or worked on the Cymex Exchange? So that's 3 on Life. Any on Cymex? Okay. Well, I made the transition from London to Singapore 28 years ago because it was still open outcry. And as a young junior clerk, our days were much longer than the traders. They traded for the time that they were in the pit. They handed over. What I've brought with me today were our manual trading cards. And as you can see here, the front side is blue and the other side is red. Blue being our buy order, red being our sell order, which you'll look familiar with your electronic trading screens today. At the top of this card is my trading symbol, and some of you may have noticed that I'm wearing my old trading floor badge, which was FUN, which to most people in the room from London would know because I was playing jokes all the time. But when I tried to come to Singapore and get the same trading symbol, it wasn't allowed because in Chinese it means rice.
It's the little things.
It's the little things, yeah. So I wasn't certainly as the Western guy in the room going to get the rice badge.
Moniker.
The moniker, or the mnemonic as we called it back then. But in terms of a day in the life, life being the exchange that we traded on at that time, we would arrive very early in the morning before most of the city turned up to open the markets up and prepare from what had happened overnight from Australia, Asia, into the London time zone. The clerks, or the administrators, the runners, as we were referred to, the yellow jackets, basically would come up to the traders in the pit, picking up these trade cards and then hoping that they could translate what had been written down to be able to type it into a terminal. And then that would then match a buyer and a seller from 2 opposing companies and 2 traders in a trading pit. So the runners would start early, finish late because they were clearing up the mess from the night before and into the end of day. But from a trader or a trader's perspective, you turn up, you take your trading cards out of your booth, you receive your pre-market orders, you write up your buys and sells on the card, and then you spend all day standing in a pit. And on some occasions, I know some of the guys in the room will know, we never left the pit, not even for a toilet break. So it was one of those days.
Busy.
That it was extremely busy. Some of the guys have still got their hair. I didn't manage to keep mine. Congratulations on that, boys. But yeah, so it was a very strenuous time, but we were young, we were ardent, we could suck up the stress, and it wasn't a problem for us.
Yes, we'll get in a minute to the skills that these days required and how they play out today. But before that, George, you said you have been overseeing the transition here in Singapore from the early days to the electronification. What was the hardest part in that? Was it education for the traders? Was it digital nativeness? What was the challenge there?
I think the biggest challenge then was to reproduce some of the camaraderie you had when you were on the trading floor, developing liquidity, giving people a sense that they had some control over their trades. In those days, it was very difficult when you traded with your hand symbols and you wrote on cards, but it was a very labor-intensive process. For a lot of you, you would not understand how much work went into running a floor, but it was infinitely more than it is now when it's digital. We could probably only handle 2% of what we trade nowadays on the electronic systems on the floor, because there was a physical limit to the number of people and the transactions you could do every day. So that was necessary to give the vibrant community we have now. But then at that time, it was not so obvious. It was same challenges you have now, tokenization of digital assets, right? You have the NEAs and the YEAs, and we'll see where it goes. But that will change. Trading systems will change. How we trade digitally would evolve, and it's good to be on that ride and continue to be on that ride.
Yeah, and one of the things that you mentioned in our call was the disintermediation of the market, in the sense that when actions like front running or getting a quote were almost literal or physical, that you went to someone and got a quote, that environment distilled trust, and trust looks different nowadays. So perhaps you can share on what do you think has been, we've heard what have been gained in terms of volume, in terms of sophistication, accuracy, but what has been lost in the transition to today's setup?
I think one of the things we can talk about today for the people in the room that were never part of the trading environment was most people I'm sure still in the room still remember the hand signals today, because it's muscle memory. Essentially, when we were flashing an order from the order booth into the trading pit, we would use our hands as a signal. And as I'm pushing my hands with my palm to my face, this was a buying indication, and this was a selling because I want to get rid of something. So it's very simple in terms of the functionality. And then you broke it down by numbers. So you had single numbers on your face, 1, and then 6 by turning your hand sideways, 10 on your hand, on your head, 50, and then up to 100. And then we had other signals for the months of the year. So it could be that you wanted to buy 10 contracts of a single month at a single price.
This is breakdance all over again.
It was the breakdancing, yeah. So I was making a few moves. And so the hand signals were very important. However, the issue that we had, because we were in a trading environment, which didn't look dissimilar to this, is that as I'm showing you the signals, all of you can look at me and all of you can see them. So there were a few people, I'm not saying anyone in the room in particular, but there were a few people that could have seen the order and jumped in front of you in a moment's notice. Now, what tends to happen in today's high-frequency algorithmic trader environment is that those guys are sitting next to the server, next to the engine, as fast into the market as is humanly possible. More often than not, they're seeing you come in and out quicker than in a blink of an eye. It's trading down from minoseconds to pinoseconds in transactional. So they're looking or getting first look at your pricing before it hits the exchange. Whereas in the old days, it was extremely open for people to see. So that change has adapted, but it's not to say that the people that are looking at your pricing still don't exist, but they just exist with technology.
Many providers in this room outside offer what they call copy trading, where you can see what others do and so on. So this is a literal copy trading in the room.
Absolutely right.
How about you, George? What do you feel that has been missing in the new form of trading? Not so new, but in the becoming form of trading.
Well, I want to go back to one of the terms you used. Front never running never occurred in the exchange. It was illegal, and but it was a feature of the floor. Essentially, if you are getting information and trading ahead of people nowadays, it's still front running, but technically speaking, that is illegal. So the electronic systems solved a lot of those problems. It made it more a fairer system for a lot of other traders. So I think that democratization was very important. That's why we have financial products now that span, countries and different people can own assets already. There's a democracy there.
So we've portrayed the whole the ecosystem in terms of shift, but I want to touch on the personal skills or the craft of trading. And Spencer, you were in the Italian bond pit, which, if I quote Bunny Lane, is the place where the violent moves in price occur, and the traders are a cast of misfits. End of quote. So what sort of qualities does that environment breeds in a trader that would be useful today?
Well, let me just pull up the book. This is the book by Bunny Lane. He's writing anonymously. I do know the author personally. I haven't quite finished the book.
He has a LinkedIn account. He told me that if I'm in Chelsea, somewhere...
Bunny Lane does have his own personal LinkedIn account with some fake history that goes with it. He's told me personally that I mentioned indirectly 3 times in the book, which should encourage me to read it more, because I was one of the reprobates that was in the Italian bond, the BTP. We would have some tremendous uptick, downtick moves in the day that we had to physically endure. And we had 2 types of trader. We had the broker, which was where I stood on the pit, and I basically had to fulfill the orders, both buys and sells throughout the day of my booth on behalf of our clients. And then around us would be local traders or individual prop traders who would take the risk on their own book on an intraday basis or sometimes an overnight basis, depending on their position. And so we would try to fulfill those orders as best we could during the day. But the minute you turned your back, somebody had either seen an order coming in, tried to jump on top of your orders, tried to jump in front of your orders, and so it was a very hectic time. But the type of person that was attracted to that pit, and I remember going in on a particular day, there was a gentleman called Tom Priest, who, like a couple of guys in the audience, I think the 2 boys sitting at the back and Tom and myself are all very, very old, dear West Ham boy fanboys. Tom needed some backup, and they threw me into this pit. I'd never felt adrenaline like it. And I demanded that I go back in there the next day, and my boss said no. And I said, well, I need to know why I can't go back. And he said, because Tom said, you are just like him. And that told me everything I need to know, because he is still the madman that I love dearly. And whilst I appreciated the rejection and the sentiment behind it, soon after he moved company and went to another shop. And I was then asked if I would like to join the BTP bit. And honestly speaking, in hindsight, it's one of the best jobs I've ever had and one of the best career paths I've ever taken. So I can't say enough about the BTP, because it was a tremendous environment.
I'll just explain that in the book, they send someone to the Spanish bond. And he says, wow, it's so wild, it's so crazy, but at least it's not the Italian one, which is too much.
True. It is true.
So this is the environment. And if you look at today's trading, you advise many companies, you work with them. What qualities gained in such circumstances could be of value for someone starting out today? You talked about the friendship, the kinship even.
Yeah, I mean, there's a lot of camaraderie in the trading floors, and you know, where the office environment, things are slightly different. We would play a lot of jokes. You know, so banter. For example, we would make a tremendous amount of things out of these, tie them to people's backs, and then watch them walk around with a shark on their back, whilst 2,500 people shouted, "Take it off." And so the camaraderie. You know, we are still a big family. You know, as people are starting to pass away, and I wanted to pay homage. So if it's okay, and I'm sure the guys will appreciate. We had a legend pass away last week, a gentleman called Mr. Nigel Ackerman, and I wanted to pay homage to him from the stage and say thank you for everything you did for us in derivatives. And I'd like to just showcase something that Nigel did back in the trading floor. So he worked in the short sterling, and he was probably the biggest short sterling trader in the market. He traded every single month and the back months and the outrights. But like...
To Nigel.
But to Nigel, but there's a little homage that I'd like to pay to Nigel, and again, this comes down to the filter, so please excuse me. Nigel would stand in the trading pit, and being the big fish, there would be small minions or, you know, small fish feeding off of his transactions. And whenever they jumped on Nigel's bandwagon, Nigel would signal very lowly, very quietly, a little signal off the hip. And so this is to you, Nigel.
Okay, so life spent at the pit. I want to go to the next topic, which is both a source of great stories and a culmination point in a transition, which is risk management. George, perhaps you can share, we've talked a lot about how risk management changes and how every time the system says, well, it's a once-in-a-lifetime event. There's not much that could have been done. But in my short time, I've seen 3 of these once-in-a-lifetime events. So perhaps you can share how the shift in technology allows and disallows better risk management.
In theory, risk management is supposed to be better because it's done real time now. We had to consolidate trades before. It was done manually. They were probably 5 people in the exchange that really knew what they were doing on the computers. So in that sense, it did get better. But now the speed of movement, the speed of money has exploded exponentially. And that has created other problems that we are trying to solve. So you do see an escalation of the highs and the lows and the chaos, but in the back of that, it only happens because better risk managements are in place now. And I think the risk departments in most organizations, particularly in the exchanges and the brokerages, are playing catch up. And we're learning and trying to take some of the edge off the risk that is happening now. Because the understanding of how we use money has changed. The products we have has grown, the number of products and the sophistication has changed. So I think that's a good thing, but that also comes down to what Jonathan has seen in all the crises that we have, and you've seen 3.
Yes, you told us about what happens when risk management blows up, or how they used to handle it with a switch.
Yes. Yeah, so if I can, I brought along a few books today that I wanted to highlight that are probably worth reading. Some you won't be able to get a hold of, but there was an amazing gentleman worked for a company that he set up, and he founded quite a few traders. It's a chap called John Sussex. And he wrote one of the first books beyond the trading floor called Day One Trader. It's a great book. However, I think I upset John because John was such a nice guy. He spoke to all the good people and the nice people, and he wrote all the nice things. And there were lots of terrible stories that didn't get into the book. So I felt there was a lot of pieces missing that could have been written and presented. It was probably better for Netflix anyway. But John, again, great book, talks about the floor and what goes on. But unfortunately, when the floor went into transition from floor to screen, there was very limited amounts of knowledge. And the trading systems that were being applied, and I brought another book along specifically to touch on that. And it's an interesting book. It's been 2nd edition now. It's called Capital Market Revolution by Patrick Young and a gentleman called Tom Faze. Tom created a platform called Pat Systems. There may be someone in the room who used to run the company, and Pat Systems was named after Tom's wife, Pat. And that book is a great transition book and story, whereas John's book is really about the trading. But the reason I'm bringing this book in was to tell you that the risk management team got so many complaints from their traders that they couldn't put orders in that they just switched it off. And a huge loss occurred on the trading books and ultimately did the demise of the business in London. So, risk management is extremely important in managing your positions. But having the right risk teams, the right platforms in place today is what keeps you alive at the end of the day. Switching off risk platforms kills businesses.
Maybe it's not a coincidence that nowadays compliance officers make more money than traders.
Well, we used to put the compliance people in the broom cupboard at the back of the room. Unfortunately, they
found a way out.
They've rose to the top, yes.
I see. Okay, there's a lot to add and to talk about, a life worth of stories. And before we proceed, if we have any questions from the hall, and in this case, not only questions, but stories to match those that you've heard, comments, waxing lyrical, anything you would like to know, that would be a good time. Do we have such Inquiries from the audience? All the familiar faces, nodding, smiling. Let's take it up a notch.
Can I just highlight, there's another book here, it's sealed, so I can't share it with you. It's called Trading Pit Hand Signals. There is a website, and I would concur that you go and take a look. It's called tradingpithistory.com. And the part that I wanted to refer to at this event was that a specific bank in the industry that's top of the game wrote to the author, Ryan Carlson, who's a friend of mine, and they asked him to remove the hand signal for their bank.
Because?
I'm going to do the hand signal.
Okay.
You can guess the bank. I'll leave it there. Well done, Kiffy. Well done.
Okay, so we are drawing to a close, and I thought how we should wrap this up. So one question that I had is, if you could start all over again, for all the innovation and improvement on the one hand, and the friendship and hard-tested moments, would you prefer to start when you did or nowadays to be a trader?
100% when I did.
George, would you start building an exchange now or when it wasn't in the market?
Well, I would definitely go back in time and start that at that point, because that was when the revolution started, and it was amazing. It's a great time for us.
Okay, the previous session was called The Revolution Will Be Tokenized. So apparently, some 30 years later, the revolution has been digitized. So that's great. Any last questions, last words of wisdom before we send you off to more beers? Okay, so thank you so much. Thank you for two incredible speakers. You are encouraged to take a look at these books. I started reading one of them, and we had beers, we had books, we had stories. I think we can ask for more for an end of day session. So thank you so much, Spencer and George. A big round of applause. Thank you,
everyone. Thank you.
Thank you.